a sense of capital.
Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Life Earnings. Your host of today, as always, is Julian, and I'm very glad that all of you are in, if somebody is in. Give me a moment, I will check if the audio quality is fine. Yeah. Sufficient, let's say it like this, sufficient for my standards, which are, as you know, the bar is not set too high. Okay, guys. So, today we will back the results, the Q4 2025 results of the Southeast Asian company, mobility, delivery and financial service and product provider Grab Holding, in which I'm invested as well quite heavily. And yeah, we are already almost good to go. But before we jump into the results, which are already live, quick disclaimer as always, in the upcoming minutes, no financial advice, no consultation whatsoever, and there's no guarantee for correctness of the provided data. So make sure you do your own due diligence, research process, decisions. It's your life, your money, your future. Okay, guys, let's go. So you can see here the results are already live. When we talk about the presentation slide deck and as well the press release. And as you know, I always copy and paste them into an Excel sheet which I've prepared for you, cleaned, and always try to develop a little bit more further to a more advanced stage, and that's the result. And yeah, you can see current results are entered, even further details are entered, and I don't want to waste any time of you guys. I would say we jump straight into it, yeah? And guys, oh wait, that's not correct. That's correct. Starting with revenue, expectations or the forecast by the analyst was roughly 937 million US dollars. My target was 947 million US dollars because I wanted to see a beat on the same level like 1 year ago, when you can see forecast 754 million compared to 764 million actual results. So again, 10 million US dollars difference. I wanted to see this, and guys, for sure we didn't see it. that's a huge miss. That's a huge miss. Not sure if the forecasts just simply have been positioned too high by the analysts. Not sure what is the background, but miss like this is definitely not that juicy. And yeah, I mean, instead of something like 20+% year-on-year growth, we're talking about 18.6% year-on-year growth. Yeah, not that bad, but don't forget, guys, we very likely have some tailwind, some support from the currency exchange rate, from the FX rate between US dollars and other currencies and the Southeast Asian currencies. And so, yeah, actually not that compelling. Maybe, guys, let me check quickly together with you, because they always state what is going on. Yeah, you can see without this tailwind, without this currency exchange report, it would be actually just 17% and not 18.6%. Yeah. So yeah, that's for sure on first glance not compelling, and on the second not as well. And I can already tell you that is straight negative revenue, which I don't like to grant, but it's a very simple decision. At least that's something positive in this regard. Let's check out what is going on with the bottom line, with the profit, the profitability. And here actually it's kind of the same picture, even though it's not the most essential and crucial number at this point in time. More important for me at the end of the year, because then they mentioned till end of the year they will be profitable, GAAP profitable, and so yeah, that then it counts, let's say it like this. But now it's not that important for me. However, forecast was $1, same like 1 year ago actually, and 1 year ago they covered it, and it's not like they're providing huge beats in terms of their profit level. I think they do this on purpose. They could do it, but they decide, no, we stick to an aggressive growth strategy. Yeah, however, they still missed this $1 forecast, and so guys, that's straight again, red. Ay. Not that nice and actually quite surprising for me. I always, when you check out the community function of my YouTube account and you go to check the posts of this channel, you see that I'm always posting my activities in my own portfolio, selling, buying shares. And when I purchase, grab shares, a lot of times I mention it's a no-brainer for me, from my perspective. Yeah, look at this. I'm not sure if I was right. Maybe you have an answer for me. Okay, however, guys, we need to go on. So that's definitely a quite heavy, challenging start. It is how it is, yeah. I mean, nowadays we are used to bad earnings results, or let's say at least market reactions. But maybe we will find something behind the curtains when we talk really about the specific company details, which is a little bit more, which gives us a little bit more pleasure and joy when we see it. Yeah, let's go into the details. What is going good and what is going not that great in terms of revenue sources, revenue income sources. Let's check out what is going on with one of these major three pillars, the deliveries. And we can see here year-on-year growth. I mean, past quarter, Q4 2024 to Q5 2025, it was 22.4%. And now year-on-year growth 18.2%, so 6% down. That's definitely strongly tanking stuff. I mean, again, 18.2% is yeah, okay, you can see it. I mean, look, it's even below the total revenue growth, the group revenue growth. Oh, not nice. So we can see already the first or the major reason why that is the case. I mean, guys, don't take it wrong. It's definitely an all-time high in terms of the absolute number, but just in terms of the relative growth level, not compelling. And let's check out what is going on with mobility. Going back here as well and check out what is going with the relative growth. So past quarter year-on-year growth 17%, now 15.2%. Yeah, it's getting lower, but at least not by even 2%. Yeah, it's not attractive, it's not convincing, but it's not like going down like more than 4% when we talk about deliveries. Not sure what is going on there, what kind of price war. I'm quite sure there will be some serious questions about this by the analysts, and I'm quite sure the management will have good answers for it. Maybe competition getting more intense, but in terms of deliveries as well, mobility, but mobility is not looking that bad, however, still bad. Yeah, GMV growth, and yeah, therefore I leave a negative mark. Just for your information, GMV means we come to GMV. It wasn't GMV. Revenue growth, guys. GMV is the next step. Forget it. Forget what I mentioned a moment ago. Okay, guys. So let's go on and check out what is going with the financial service. Maybe they are developing great in terms of revenue. We can see. I mean, it's a rising star. High hopes into it. I mean, it depends. Revenue is a result out of, in financial services, how strict they are with granting loans and working with the deposits, how risk-orientated they are, let's say it like this. That's, I assume, quite easy to manipulate. Actually, the same with here, with the revenue in the other directions. But financials, even, it's more, from my perspective, more easy to enhance it by the management, yeah, with different levers, let's say it like this, and decisions. And it's not that worse, but however you want to see it, it's growing really on a high scale for a long period of time. And past quarter year growth was 41%, now it's 34%. So again, not really compelling. Yes, by far an all-time high. 9 million is not, quarter on quarter, is for sure not bad, For sure not bad. It's the second largest. Largest was 10 million. On an absolute level, year-on-year growth, quarter-on-quarter growth. But look, you want to see it's getting larger, this absolute number. And 1 year ago, Q3 to Q4, it grew by 10 million US dollars, and now just by 9 million US dollars. Yeah, it's okay if when year-on-year growth getting more and more flat, but just 9 million, a lower number than 1 year ago, not nice, not nice. And again, red. Oh, guys, it doesn't look very bright right now. But let's see what's going on with GMV. GMV stands for gross merchandise value. So basically, the whole load which goes through the app, through the customers. Yeah, if a customer orders for 20 US dollars pizza, then GMV gets at 20 US dollars, and if Grab is taking a fee of 30%, then the revenue will be 6 US dollars for in the delivery department. Yeah, so this is GMV. And guys, let's see what is going on here. So a really important number, a very clean number, let's say it like this, not that easy affectable like the revenue, because there you can just put the fee up and down and whatsoever, and on what quarter there will not be the big effect. Yeah, but with GMV it's not that easy, let's say it like this. But let's see what's going on here, and we see year-on-year growth, past quarters 26%, now just 22%. Not attractive as well. So again, even slowing more than revenue. Yeah, you can see here 4.2%, and here we have 4.4%. Yeah, so I mean, it's simple. It's simple. I just need the red marker today. It seems like this, and really unexpected for me. But it is how it is. Let's see what is going on with the GMV in terms of mobility. And here we have before 20.5% and now 19.8%, so difference of 0.7%. That's good. That's actually better than in terms of revenue. Not that negative. Again, we would love to see it's growing, but it's actually not. I mean, maybe I'm too fair in this regard. I want to leave at least something positive, even if it's just a neutral rating, but I think that's fair. Yeah, that's fair. It's okay that they will not keep this 20.5% in terms of GMV, and it's definitely an all-time high. It is quite solid in terms of quarter-on-quarter growth. Yeah, it's okay. It's okay. Look, when we see here the absolute number 1 year ago, quarter-on-quarter, it was roughly like 115 million, 120 million, let's say it like this, and now it's at least more, it's like 130 million. Yeah, that's okay. So it's increasing a bit, and I definitely not convincing, but compared to the other KPIs we covered so far, very solid. Solid, not very solid. Okay, and therefore leave a neutral rating. But a bloody one, a neutral to red rating, yeah, to negative rating. Let's see what is going on with the take rate. Take rate is the ratio between the revenue and the GMV. So really, how high is the share in terms of the fees for Grab to get revenue out of the GMV. And we can see here the delivery take rate. And let's see how it is looking. And I mean, last quarter it decreased by 0.4%, and we would love to see it stable or increasing. And at least the shrinkage is getting a little bit less strong with 0.3%, minus 0.3%. But still, it's shrinking. Yeah, it is shrinking. And you can see 12.3%. It's the lowest take rate. Yeah, it's the lowest take rate of the past 2 years. That's the truth. And guys, sorry, even if the shrinkage is getting a little bit more flat, it's still really not convincing, and therefore granting a negative one. Let's see what is going on with the mobility take rate. And we see past quarter 0.5% year over year shrinkage, and this quarter year over year minus 0.6, so increasing actually. And here again we can see the take rate was never that low. It's now 14.9%, never that low. It seems like really some tough competition is going on, or they need to leave more money to the riders, to the drivers, or whatever the reason is. But guys, for sure, take rate, not convincing, so negative as well. Man, that's red. I didn't expect this. It's not hurting that much because I have high trust in this company and in this business case, let's say it like this, but crazy so far. But let's see what is going on with the MTU, monthly transactive users. So the active customers, active customers, clients of Grab. Past quarter, roughly 14% year-on-year growth, now 15% year-on-year growth, so it's accelerating, and that is excellent. It's excellent because, I mean, having customers, having a strong fundament, and that are the customers in this business, maybe many of them are banking customers, I could imagine at least, it's because of this increasing. However, or is it general MTU? Yes, it's general MTU. I could imagine that there are, among them are many banking customers. However, having a solid fundament with a good customer base promises good business in the future, or is at least a good piece of the puzzle for good profitable business in the future, and more revenue, more GMV. And yeah, 50 million, I mean, that's a statement. It's the largest, I assume it's the largest, must check it, but it seems like it's one of the largest, or the largest, one of the largest year-on-year growths. Q3 to Q4 2024 was a bit larger, I think, with 3 million more MTUs. But however, it is nice to see it's kind of re-accelerating. I mean, who knows, maybe past quarter was weak. However, all-time high, very good quarter-on-quarter growth, accelerating year-on-year growth. That for me is clear positive. And first positive statement so far in rating, so that's nice. Must ring the bell mentally. On demand, there are no information about it. It was sometimes in the past the case, like in past quarter, but this quarter not. So I can't compare it quarter on year and whatsoever. Don't has an impact on the rating. But I assume these non-demand MTUs are growing very strongly. That's my expectation. Maybe it will get something mentioned by the CEO during the earnings call. Let's see what is going on with another KPI. So on-demand GMV per MTU. Let's see if the number is correctly calculated. Yeah, it is. And so we want to see that it's kind of upselling, cross-selling. So the customers, not only more customers getting acquired, but as well those customers getting or becoming bigger and bigger cash cows and creating more revenue per customer. And so we want to see that this number is increasing. And you can see past quarter, 9% up, now 5% up. Yeah, it's up. Yeah, it's one of the highest, second highest in the past 2 years, but it's decreasing from past quarter. And no, that's not nice. That's not nice. That is not what I like to see. I mean, there's as well inflation in Southeast Asia, and when this number getting down, at least it should go up by the inflation, and I don't think that's the case. I mean, 5% maybe, yes, year over year, but quarter over quarter, not nice to see that it's decreasing. Okay, now we step in. I mean, we covered the legacy business, which is mobility and deliveries, and so far, not so good. So for sure, revenue side is negative, profit side is negative, and these details overall, I mean, MTU is a very important number, and it's nice to see that this is developing in the right direction, but the other ones not convincing us. Not good. Definitely all red, more or less, if we would leave a color. But let's see what is going on with loan and bank deposits. So with their rising star again, the banking business, Malaysia, Singapore, but they invested as well in Superbank in Indonesia. Actually, I make a note. Superbank Indonesia had an IPO in Indonesia, so went public as a public traded company on 17th of February, so before Christmas, let's say it like this. And the stock went up 24% after the IPO. And if I calculated correctly, Grab has roughly 37% coverage of this company, which is amazing. And they acquired 5 million customers in 17 months. Crazy. 5 million customers, 17 months. Not that bad for an upcoming banking business, not the one which is working like or running since 3 years. Yeah, so crazy. However, let's check out what is going with the loan portfolio. This will have more focus on these banks in Malaysia and Singapore. And loan portfolio, yes, has as well. It's about how strong they're granting loans, money to their banking customers. However, we want to see it's growing aggressively because that's a strong source of income, obviously. And we can see here past quarter, 65% year-on-year growth, now 120% year-on-year growth. And by far the strongest one. I mean, you can see now an absolute number from quarter to quarter. The strongest one was maybe that, not sure, but that seems quite high. That seems quite high. So, and that is roughly 140 million, yeah? And now they went up by 260, is it correct? 360 million. So, second largest one was 140 million. Now, 360 million more on the loan side. Whew. Impressive. It seems like they getting more active on the risky side of banking business life, but on the other hand, it might be the case they really started the growth engine and people are adopting heavy to this banking business, which would be reasonable because this monthly transactive users growing quite strongly, and maybe some of them are here active as loan customers. However, that is strong green color. Nice. Finally, something positive we start with when we talk about a department or industry of Grab. Let's see what is going on when we see how much loan per MTU, so a KPI, and obviously it's growing then as well quite strongly. I mean, past quarter 45% year-on-year growth, now 91%, very strong. Not on the same level like the loan portfolio itself, but you can see really the loan level is rising. And for me, my interpretation is that people just utilize more and more the banking services and products of Grab. That's nice to hear. And now let's see how strong the customers of Grab, the banking customers, trust Grab as a banking business and leave some deposits, some money. And here we had, actually not a crazy compelling number. Past quarter was roughly 20% year-on-year growth, now 33%. Doesn't seem that big, especially when we checked out the number before, but again, the growth almost doubled the number. That's crazy. That's nice to see. That's a good acceleration, roughly 290 million. Seems like that's a record as well. Seems like it's for sure the record. It went down, actually. It went down from Q2 to Q3 this year. But again, for sure, nice development. If everything of them, if customers of the banking customers are not missing to pay their loans and whatsoever, yeah. So the payments getting executed, then it's fine, yeah. So risk should not become reality too often. But however, it looks good. Let's see what is going on with the bank deposits per MTU. And we can see here that's developing even way stronger. I mean, past quarter 5% roughly, now 16% year-on-year growth. That is really, really nice from my perspective. Actually, it's not the all-time high, because 2 quarters ago or even 3 quarters ago it was higher. But I assume major reason for this is that that many new customers have been onboarded again, and they need to start to accelerate in terms of depositing money. However, I mean, in this case, because the absolute number is not all-time high, even though year-on-year growth is re-accelerating, I just leave a neutral mark. I'm quite confident. Next quarter, I will leave a positive mark. Yeah, but that's the case so far. And you can see the rising stars really rising. And I mean, banking business, it was stated that banking business will be profitable in the last quarter this year, and you can see that they're really working on it, and it's really heading heavily in this direction, and that's nice to see. If they hopefully do this on a very structured and serious and wise manner, let's say it like this, but that's nice. That's something positive. One of the original pillars of income, of revenue, have been as well advertisement, but then they decided to spread it across the 3 different other pillars. So in all of them, when we talk about revenue, there is some advertisement revenue, for instance, included, but they state always some separately what is going on with it. And here they state the monthly active advertisers. And you can see past quarter it grew by 15%, this quarter by 21%, so it's accelerating, which is nice. Not sure if there's some kind of seasonality existing, but you can see here Q3 to Q4 2024 it went down by 10,000 advertisers, and then it re-accelerated to this all-time high of past quarter, and we are still at this all-time high. I'm happy it not went down from past quarter to this quarter, but however, it's not an all-time high. Yeah. However, it's a bit like bank deposits per MTU. Relatively, it's re-accelerating. Absolute number, not a new all-time high. That's the reason why I leave it a neutral rating. And let's see what is going on with the average spend by monthly active advertisers year-on-year growth. Yeah. So how good they're utilizing these advertisements, how active they are, these advertisers. And there is no year-on-year number because these numbers are simply missing. But you can see in the past quarters, not sure again if that's seasonality, it grow by 40% or 30% or even higher numbers. But now only by 23%. So that's actually for sure not nice. That's not nice. No. We want to see that they're utilizing more and more the advertisement portfolio or channels of Grab, and that doesn't seem to be the case. Yeah, even if there's some seasonality behind Q3 to Q4, I don't think that's the reason. Now let's see what is going on with the incentives in the different service departments of Grab. Incentives is something which getting granted to the customers of Grab app, to the drivers, to the riders, to the restaurants, the merchants of Grab. So they're getting more attracted, using more heavily the app and the services, and yeah, so kind of a bonus if you want to tell it like this, or discount or whatsoever. And we can see here, so we want to see they get low. I mean, they have to do it sometimes because competition is strong. However, we want to see it's decreasing. And I mean, past quarter, 28% year-on-year growth, no, only 26%, so minus 2%. but still by far an all-time high, and for sure nothing which we should cheer about, so it's still very, very high. I can't leave it something positive. No. Let's see what is going on with mobility. And here, luckily or nicely, it's getting down as well by 2.5%, 23% past quarter year-on-year growth, this quarter roughly 21%. That's nice to see. But here as well, maybe I should leave it a neutral rating, because I think in the past quarters it always went up, and that it's going finally down. Maybe I will leave it a neutral rating, because it's heading to the right direction, and it's clear that it's not going down to 50% of the past number. But I think neutral is okay. Yeah, neutral to red, but it is okay from my side. Hi Mick B52S, cheers collega, and thank you very much for having you in the chat. Feel free to interact with me if you are interested. Let's see what is going on with the incentives of financial services. I mean, you can see it on the absolute number. It's roughly 4.5 million, 5 million. It's on a very low level. On a very low level. And you saw how loan portfolio, how banking deposits, how it's growing dramatically. So yeah, incentives here compared to past quarters growing as well dramatically, with 15% year-on-year growth compared to past quarter, 5% year-on-year growth. But it is really on a low level. However, negative. Yeah, I mean, here I was a little bit more kind, let's say it like this, when leaving this rating. And here I need to be very strict, and I think it's just fair. And see what is going on with the total on-demand incentive share. So the KPI based on on-demand GMV in total. And we want to see it's at least stable. Yeah, at least stable or getting down. And you can see past quarter it grow by 0.2%, now by 0.3%. So that is more or less on the same level. You can see, I think on purpose, the management keeps it roughly on 10% of the on-demand GMV. Roughly 10%. However, that is an all-time high, and that is, in terms of evaluation, an all-time low. Yeah, so leaving a negative rating, no other choice from my perspective. But what is going on with the shareholder orientation? What is going on with free cash flow and with stock-based compensation? And let's see what the margin is. I mean, past quarter it went up by roughly 12%, and now it went down year on year by roughly 1%. Ooh, not nice. Yes, again, there's a seasonality between Q3 and Q4, obviously. You can see it 1 year ago, but yeah, it's lower than 1 year ago. 9% 1 year ago, and now 8.4%. Nah, not nice. I don't think that will be the case for 2026. I think they will polish this up and it will get improved more and more. But just this number, no way that I granted something else than negative. Okay, and now let's taking a look how much shareholder dilution is going on when we screen the stock-based compensation of revenue in this regard, based on revenue. And we want to see it's getting down. And I mean, past quarter it already went down by 1.1%, which is great. Now by another 1.4% year on year. That is amazing. And here you can see the company or the business getting financially likely way more stable intrinsically, because now we have stock-based compensation on the lowest level so far, by far, with 5%. So that's very positive. I mean, it's general number, very regular in terms of growth companies to grant some stock-based compensation. It's part of the payment, part of motivation and loyalty as well. Fight for the best talents, yeah, on the staff market. Yeah, it's positive, but on the other hand, it's not like crazy essential, most crucial number. Hi Eduardo Vargas 206, you're telling something, and that is how you're looking at Grab. Just got here. If you talked about it, just let me know how long to rewind. If you talk about it, oh shit. I talked since I think 20 minutes. Yeah, I think roughly 20 minutes I started to talk about the results. But you can stay live and just follow and ask some questions if you like. Feel free. Don't hesitate. Because I will sum up everything at the end quickly. And that is not that far in the future, actually. Okay, guys. So far, so bad again. Yeah. So, I mean, we have some light at the end of the funnel in terms of the rising star, the financial business, the banking business, digital banking business. Incentives doesn't look completely trash. Stock-based compensation doesn't look trash. MTU, which is very nice. Again, I assume these are banking customers. A lot of banking customers have been added. That is actually quite positive, but everything else very negative, or quite negative. Not that, something positive behind the curtains, and especially in terms of financials and in terms of banking business, and I assume that might be a good surprise in the past quarters. Yeah, it might be a strong driver, still very underestimated. I mean, many people out there compare Grab to Uber, for instance, and they completely forget to talk really about this banking business. Without this banking business, I would not be invested in Grab. I mentioned it multiple times in the past 2 years. And I stick to this statement. And I assume now the point in time comes, and it's not that far away in the future that, it pops through the surface why I mentioned this, because results will be positively affected by the banking business. What else they have mentioned is, let's see what is going on with the full year guidance. 2025. First, we should check out what is going on, how much revenue they have accomplished. It is 3.367. Oh yeah, that's not 367. Okay, wait. Let's push this number here. Yeah, that's definitely a lower number, guys. I can tell it. That's a lower number. That is not that nice, actually. So definitely missed their full year outlook. And adjusted EBITDA. Let me check quickly how much they have accomplished. Adjusted EBITDA full year 500 million, 60% year on year. I mean, that doesn't sound bad on the first glance. Let's go back. 600 million. Okay. That seems like a huge beat in terms of the expectations, if I'm not mistaken. So that is at least nice. And then they provided maybe leave some color on it. That is positive. Adjusted EBITDA is positive for 2025, but revenue is negative. Miss is for sure negative. Yeah. Yeah. Look, if they would achieve 22 million more revenue this quarter, then they would cover the full year guidance, but that is not the case. That's unfortunate. The new one is not that bad from my perspective, I must say, because it's roughly 4.07 billion revenue US dollars, which is 20.1% year-on-year growth, and I think that is not low. That is not low. That is more than I expected. I always more expect something like a higher teen number, like 17, 18%, something like this. And 20.1% sounds quite compelling. And 43%, 4% adjusted EBITDA, and by far a record. Doesn't look bad at all too. It was stronger. How much was it? Let's check out what is going on. Guys, I will check in a moment your comments and reply on it. 60% year on year, so guidance is now 43% for full year, but it's still okay, yeah? It's still okay. So from my perspective, revenue looks strong, and adjusted EBITDA is solid. Could be more, I assume. Look, I mean, they achieved a high beat as well now in terms of the guidance, and I think it's sandbagging. Maybe it's 800, 900 million at the end of the year, and way more than 43% year-on-year growth. Yeah, but so far is good, and it's important. I mean, we always invest into the future as well. Big aspect for me, more important than the actual results, and that is nice to see that it's developing the right direction. Then we have another bonus, and that is what they have announced. 500 million shares repurchase program, yeah, which was authorized by the board, and that is nice that they're buying back some shares. I mean, 500 million is not that much, and they are full of liquidity. They have so much money and so much cash in their banks, yeah. So, however, it's a good sign that at least they think we are. They are undervalued. It's an undervalued company. And yes, I mean, look, when you check out stock-based compensation, how much was it? Like, that's 45 million. Yeah, okay. It was roughly 45 million this quarter. Always 50 million. And it's getting down, yeah? So the good thing is, this will really lift up the boats, yeah? This is not like buying back shares to grant them later for stock-based compensation to your employees. It seems like really that is clean, buying back shares and getting more control over the company and just thinking, yeah, you're undervalued, yeah. So that's nice to see. And then what they did first time, as far as I know, they provided a 3-year guidance till 2028. So 2026, 7, 8. 2028, yeah. And group revenue, you can see here, CAGR, so compound annual growth rate of 20%. That seems solid, very solid actually, that's nice. So I grant this as well positive, yeah, even though it's like this whole thing, it's not that important for me right now, but it shows you how they are convinced with, and most of the time, yes, they missed now the full year revenue guidance, but most of the time they send back in terms of the results, their guidances, and stating something like 20% growth rate is really nice to see. What is going on with the adjusted EBITDA? And it's 1.5 billion, yeah. So I assume that is quite realistic, because look, for instance, we really just achieved the $710 million next year. Then this is, let's do this together. I don't want to. Let's do it here. We do it here. Okay. So that is 2026, 2027, 2028. Let's check. I mean, for 43%, maybe next time they go for 35%. No, it's maybe too low. Like this. And then let's go for this. Look, they maybe accelerate even with their calculation. Like something like this maybe. Yeah, that might be the case. So the adjusted EBITDA growth rates seem to be very strong. Again, now they state something like 43%, 2025 to 2026. Then this would include something like 45%, so a little bit higher even. And then, maybe like more like this. Who knows? Is this realistic? Yeah. Like this maybe. Yeah, that is good. That looks good. That I think looks good. So now 43% expected year-on-year growth, and then 50%, and and then back to 40%. Yeah. So this is how they would achieve this 1.5 billion US dollars adjusted EBITDA in 2028, and that looks strong from my perspective. That looks strong. Like to see it. And then they have this adjusted free cash flow conversion, and I'm not sure actually what they mean with it. Not sure if it is. I honestly I don't know it. I don't know it. Not sure if it means like this number adjusted free cash flow margin goes to 80%. I don't expect this will be the case. So I keep this out of the rating. I assume it's high, but I have no clue what is exactly behind this. So yeah, if you have an idea, feel free to share it in the chat. But yeah, that's it so far. And guys, I mean, now we fetch up these results, then I will check the chat, and then I will check quickly presentation slide deck, but really quickly the first market reactions and the price development. Okay, we see top and bottom line growth straight red. We see when we talk about the details of revenue, nothing will change this perspective. And then we have a lot of more company business specific numbers, this on demand stuff, like legacy business, delivery and mobility doesn't look compelling. However, the MTU number, the user fundament looks strong. That is nice to see. And especially, and I think that is the brightest moment of the whole call, is definitely the banking business, how it is developing in terms of loan portfolio and banking deposits. If they should keep it on a serious, substantial, long-lasting level, not too risky, let's say like this, going too much into risk in terms of the banking business, not granting too many people who should not get a loan, for instance, then I think that is really nice, and that is strong hope, strong perspective for this business, strong revenue and profit driver. And yeah, that's nice to see. Was really good, really good. Then we have this advertisement business, hard to tell. I mean, it's more like a secondary income source. It's existing. It should get stronger with the time. I assume the margins of this business are very strong and similar like to Amazon, for instance, because you simply don't need to invest that much money to get more out of it. Yeah, but it's stagnating, it's a bit constant, could be growth stronger. And then we have all these incentives which are okay to negative. Just free cash flow margin is not convincing, and stock-based compensation at least is a bit, yeah. That is nice to see. It shows that they're getting more confident with being independently strong with just their own engine, with their own power house of business sectors, and that they don't need to pay that much money anymore or loan anymore in form of shares. However, all of those minor details, let's give it a neutral rating, because again, at least for me, banking business is a huge aspect for this business. This is more like a nice source of income for advertisement business in the back, which can create huge margin, I think, huge profit based on this active user behavior on the Grab Super app. But this one here as well, I mean, advertisement can make good money from my perspective, and another good source of profit in the future might be the banking business, and it's nice to see that's developing great. And however, overall neutral. So we have here straight negative, here something neutral, and then we have a few primarily positive aspects in terms of the guidance for next year especially seems quite solid. Then there is a repurchase program, okay, nothing too special, but it's existing, that's nice. And that they are confident that they provide outlook for 2028, which is quite confident from my perspective, quite confident, very confident actually, and that is nice. And I mean, it's difficult. So it's not difficult. No. I need to be strict. I need to be strict as always. And I mean, you know that revenue and profit, top and bottom line, is always for me takes most weight, and that is for sure negative by far. I mean, then we have something here neutral and here something positive. Yeah, future is important, but all this future stuff and these details doesn't make this year like a big one. For sure not. For sure not positive. It's not changing it, and turning the tables completely. Question is, should I leave a neutral rating or a negative one? I mean, I love this loan stuff, this banking stuff, how it's developing. I love that MTU is developing strongly. And I love this outlook. And what is triggering me is profit. Yeah, that's not nice, but that is again how they can work on this easily. They want to keep it that low as long as they can grow aggressively. The revenue miss is way more concerning, let's say like this. But yet, other than the revenue and the GMV development, which is very strong connected to the revenue, it's more or less the same department. If we just ignore everything else, and we take a look at those numbers here, it would not look that crazy red, yeah. And this is what I consider, and I like this here as well. I like this guidance stuff. I like the future, the more near future and the more far future, and represent as well through good banking business. And therefore, even though it is a quite negative neutral, I would say, but I leave a neutral rating. Difficult decision, I must say, but it's okay for me. It will not change anything too heavily. Yes, this quarter, I assume there are some reasons why they missed so much revenue in terms of compared to the forecast, but I assume there is a good reason for it. And again, here behind this top and bottom line, there are some very interesting developments going on, positive going on, what I like to see, and I have high trust in the management, and for me, neutral rating is absolutely fair. Guys, let me check quickly the chat function, and then I check what is going on with the market price, and I will check quickly what is going on with the first market reactions by users of Seeking Alpha. Eduardo Vegas writing, stay alive, I have 50,000 shares low back. 50,000 shares is for sure some shares. I mean, I have 11,000 shares and I already feel quite full. So congratulations. I mean, it always depends how strong this part of your portfolio is. For me, this call or this results doesn't change too much. I'm convinced again extremely in the regions, Indonesia, Singapore, Malaysia, Philippines, Vietnam. All of this is nice. For sure, and I'm at least confident. Arne, why is Grab doing buybacks? Arne is asking why is Grab doing buybacks? Maybe we can check out what is going on with their cash position. And I mean, it's a message as well that they evaluate that the company is undervalued at the moment, so that's a message as well to us as investors, I think, and to the market. But when you see, I mean, they have 7 billion in cash at the moment, so very do you see it? It's not, doesn't seem to move. No? Now it's working. Okay. Yeah, that looks good. 7 billion, more than 7 billion in cash, so I think it's fair to utilize it. Why they do it exactly? No, not sure. Maybe because the stock price is just cheap. I assume that will be the major reason. And Eduardo, one comment later, exactly mentioned this. Extra cream. Mick is mentioning long term always extra cream. Taron mentioned, are you streaming live call? No, I won't. What about the stash acquisition? I have no clue actually. Is something mentioned? Let me check. Anything mentioned? I can't see anything here. No clue. If you want to add something, old hat 12, 13, feel free regarding the stash acquisition. Kelmy Curtis mentioned I have 120 general calls contracts. Yeah. Hey. Okay, I mean, it's up to you. Everything is up to you. I mean, you see that there's Eduardo with 50,000 shares of Grab, which is crazy. But again, it's always up to your wallet, to your financial level, how you can work with it. Again, I have something like 11,000 shares, for instance. I feel confident about Grab, and even though those results doesn't express this in the best manner, it doesn't change that much. But let me check as well quickly what is going on with the first market reactions, because I will be off not that far in the future. So go for Grab. Seeking Alpha, a platform which I can definitely recommend. Oh, I think it was down 6 or 7% when I started the call, and it's now only 3.3%. So maybe people see something positive, maybe management already communicating something positive in the call. So let's see. Where is preview? Okay, no news so far. Is that really correct? I mean, then there are no market reactions, obviously. Yeah, that's how it is. Okay, then let's go quickly through the presentation slide deck and see if we can find some interesting stuff. But on the first glance, I didn't see anything. But I checked it really quickly, just really, really quickly. Make it a bit larger. Yeah, that looks good. Yeah, those are the numbers we already covered, actually. Normally, they add always some more soft information about it, like riders are happy and the engagement rate grows by this and that. And now it seems like really numbers driven, high numbers driven. You can see here as well the liquidity level, which is getting stronger and stronger. Or let's say overall stronger and stronger. We see different income sources, different pillars of incomes, incentives, the outlook, which is new. Yeah, but actually not that much interesting, yeah? In terms of like some soft news. Here you can read some, maybe let's check out, we delivered another record full year. Wait, enlarge this a bit for you guys. Okay, they talk about this 3-year outlook. They talk about the repurchase program. 50 million transactive users. Yeah, that's definitely something nice as well. Yeah, and then there are a lot of details which they always provide. I assume not game-changing ones. Guys, let me check one more time the chat. No, I don't have Rocket Lab. At least I'm not. The Pet Rock is writing, we will really see after the call and tomorrow when the market opens. Yeah, I mean, and you know that the circumstances currently in the market are not the best. And if it goes down and it goes down, you know, I mean, for me, Rocket Lab, Grab is for sure a long-term investment. Again, I'm very convinced by the regions. And for me, it's not about the quick profit, quick money. And I think Grab is exactly going for the strategy. And I'm so motivated to see the development for this year, that they turn more profitable, full year net profitable. And I think when other market participants realize this, that might be a game changer as well. And yeah, cross my fingers that will be the case, but I'm quite confident. However, guys, that's it for now. Just a quick glance into the future. These are the next earnings calls. So actually, I'm not 100% sure if I will back Hims and Hers results because I'm not invested anymore. I made my money and sold last week my full position. It hurt, but it was so far the right decision. Likely we'll cover it the Monday after next Monday. But if I not do it, I will after this day I will cover new banking from Latin America, from Brazil, and then last but not least, the last company I will back through my live earning streams, which will be Sentinel-1 cybersecurity company, and that will be mid of March, roughly 12th of March. Yeah. So wait, let's check me out. What is new in the chat? The market is totally weird right now. App had great earnings, dumped. Yeah, 100%. Mick, you're very welcome, and call me Curtis. I'm completely shared. This my battery getting low actually from the laptop, from the notebook, so I need to turn off. Guys, if you enjoyed the stream, feel free to like it. Would be amazing. That makes me happy, and maybe it makes you happy if you make someone else happy. Subscribe to the channel if you like. You can follow me as well on Instagram, of course. I always giving updates about my portfolio activities. And yeah, that's it for now. I hope you enjoyed it. And again, that was no financial advice, consultation, no correctness for provided data. Make sure you do your own decisions. Yeah, thank you very much as well, Call Me Curtis, for joining. You're very welcome. I'm very happy you found my channel, and hopefully you stay loyal to this channel. I give my best to give you good financial food, let's say it like this. However, guys, thank you very much for joining. I'm out, and yeah, take care of yourself, take care of your health, more important than any money, and of course of the people you love. And yeah, see you next time. Bye and cheers.
A sense of capital.
And smash that like. Cheers.